How's it going, everybody? It's Stas here, and in this video, we're going to be doing an overall market update, taking a look at the Dow Jones, the S&P 500, and the Nasdaq. We're also going to be doing a trading update, talking about what I personally did today in the markets, as well as some stocks and ETFs that I'm watching and looking to trade right now in the month of December, heading into this new year in 2020 here in a couple of days. And as you guys read in the title, we're also going to be talking about Tesla stock because it hit $420 per share today, and I'm going to be sharing with you all my perspective on whether or not Tesla stock is in a mini bubble right now. Yes, is Tesla stock in a bubble? I'll give you guys my opinion on that today, and we'll talk about UGAZ, natural gas, and again, a bunch of other stocks. So before we do get into that, all I ask from you is if you enjoyed this video, find value in this video, consider hitting the like button, and also consider subscribing to the channel if you want to see further content from me. And if you want 2 free stocks from Webull valued up to $1,400, go sign up through my affiliate link down below. If you deposit $100 actually, you get those 2 free stocks that are valued up to $1,400. So without further ado, guys, let's get right into it, starting off here with the SPX, also known as the S&P 500, the 500 largest publicly traded U.S. companies. So today, guys, was actually a pretty boring day because, like I mentioned a couple of days ago, and like many of you already know at this point, during the holidays, Christmas holiday, heading into the new year, volume in the markets is pretty low, activity's low, and therefore markets don't really do anything crazy. They really don't see massive rallies to the upside. They really don't sell off too much. You know, sometimes maybe they see these crazy runs during the holidays, but a lot of the time it's kind of calm, right? The waters are calm, consolidation, just a pretty boring day, right? And that's what we saw today. S&P 500 was up $2.79 at the close, up 0.09%. And if we see this 5-day 5-minute, we all see, on this 5-day 5-minute chart, we all see that big jump. That was on Friday, I believe, right? Big gap up. We saw a bit of consolidation later on in the day, and that's pretty much what continued today in the market. And a positive thing for the bulls out there is that we did close above the 180 SMA here on the 5-day 5-minute chart. If we pull back to the hourly chart, you can see we closed above that EMA, which is also a good sign. But honestly, with how overbought the market is on this 20-day 1-hour chart, like I've been mentioning, I wouldn't be surprised if we pulled down, maybe to about $3,200, a nice 25-point correction, which honestly is peanuts at this point for the S&P. That's just a 0.5, 0.6% correction, which is really nothing, but that would be a healthy one in the short term here, for the uptrend to continue, at the steady pace that it has been, right? So that's pretty much the S&P. Nothing crazy to talk about, honestly, today, guys. Again, pretty boring day, but if we look at the Dow, it did a bit better, up 0.3%, up 96 points at the close, but again, nothing crazy, right? We continued the uptrend. We actually did not hit an all-time high today on the S&P. I didn't mention that we hit an all-time high at around 32.27, so that's another good thing, for the bulls, but believe it or not, the Dow didn't, although it hit a higher high. We hit the all-time high on Friday on this big gap up at around 28,608. So at this point, the Dow also held the 180 SMA on the 5-day 5-minute at the close of the market, which is quite positive in my opinion. If we go out to the hourly chart, we can see we also held the EMA, and again, I could see a pull down, maybe down to 28,400, right on top of that 50 SMA. I think that could be a healthy zone for the Dow Jones to come down. The RSI would also come down to a healthy spot, and then from there, we could continue the uptrend, in my personal opinion. So let's break down the Nasdaq, which you guys can see it's up 50 cents right now, but these are the futures. So let me pull up my Yahoo Finance app very quickly so we can see what it closed at. So the Nasdaq today closed up 0.23%, up $20.69. So decent day, 0.25%, 0.25% in the green today. For the Nasdaq on this 20-day 1-hour chart, we're holding the 50 SMA. Did we hit an all-time high today? Let me double check that for you guys. It seems like we did. Yes, on the 23rd, which is today, we hit an all-time high at around 87.43, and that was a little bit before the market opened in terms of these futures, and from there we downtrended, but either way, we did end up closing green for the Nasdaq. So if we go to the 5-day 5-minute, we can see the uptrend is holding nicely. Back on that hourly chart, it's holding nicely, and to the 4-hour chart, let's take a look at what it looks like here. Like I mentioned in previous videos, very overbought, very overbought. So this one, in my opinion, out of the 3 major indexes that we talk about on this channel, this needs the pull down the most. RSI is at 75, very overextended above that 50 SMA, which is the area that I honestly would want to see this pull down to for it to be considered a healthy pull down, in my opinion, and that would be around a 1.3%, which in the grand scheme of things, guys, that pullback is pennies, right? Or peanuts, rather, right? 1.3%, that's nothing. So if we did that, that'd just be really healthy, and then from there, we can maybe hop into TQQ, three Qs, T with the 3 Qs, which goes up whenever the the Nasdaq is going up at a 3x rate. So this one follows the Nasdaq, and SPXL, this follows the S&P 500 in terms of going up when the S&P is going up at a 3x rate. So overall, that's kind of the breakdown here in these markets. Again, it was a slow day. Volumes kind of low during these holidays, days. People are just not trading. People are maybe taking profits or just booking losses for tax reasons for the end of the year. And yeah, that's kind of the story of the day. I'd love to know what you guys have to think about that down below. Any comments you'd like to add? I'd love to hear your opinion. Now, let's talk about what I personally did in the stock market today. And honestly, it wasn't much, guys. It really wasn't much, but let's get into it. So all I really did throughout the day today was monitor my swing trades that I'm currently in. And if you guys don't know, if you're new to the channel, I'm swing trading at this point, what is it? 3 different stocks. 3 different stocks. One that I actually took profits on, a little profits, I believe on Thursday or Friday, and we'll get into that one here in a second. So the first one that I'm swing trading is Home Depot. Home Depot actually saw a bit of a correction today, down about 2 points, down 0.9%, but overall I'm still up on my position, right? I'm in at around 217, 218 on this stock. I believe I got in either this day or the day after. I believe it was on this day, and honestly, this pull down is healthy in my opinion. We're still holding the uptrend, although we dipped a bit below that 50 SMA. I'm not too worried about this quite yet. If we start to pull down even further to where my cost basis is, maybe even below that 180 SMA again, that's where I'm probably cutting losses. But for now, since again I'm already up on the position, I have some buffer built, and the uptrend is still intact, technically speaking here, I'm holding these shares most likely through the holiday and into the new year at this point, into 2020. So that's kind of the breakdown here on one of my swings. My other swing is PayPal, which actually did well. It was doing well earlier in the day, but this one also saw a pull down and ended up closing down 14 cents, down 0.13%. And if we zoom in a bit on the 5-day 5-minute, you guys can see this morning we saw this kind of cup pattern and it was about to burst out, but then ultimately we consolidated and dumped, which wasn't too good in my opinion. But either way, we still ended up closing above the 108 level of support, which is why I'm still holding it, guys. This is honestly why I'm still holding it, and we're holding that 180 SMA on the 10-day 30-minute chart. And if you guys have been following the channel, you know that I've been buying PayPal since this dip right here in the 104s. I believe I bought more in the 105s. If you remember, I took some profits here here at around 108 when we broke above it. That was a bullish sign to me for me to hold the rest of the shares that I do own, and that's where I'm at right now. So I'm still holding those shares, and ultimately I want to sell out, like I've been mentioning in these videos, at around $112, which from where we are now, that's another 3% to the upside, which I really think is possible for PayPal here in the next couple of weeks heading into 2020. So the last one that I'm currently in is ATV, and this also saw a red day today, down 33 cents, down 0.5%, 0.56% to be exact. And this is one I started buying, I believe, in the 56, 57 range. This is the one actually I took profits on a couple days ago here at around 59, because I mentioned my plan with ATV was that the closer it got to 60, that's where I want to shave off some profits to be safe, right? And why $60? Because if we go on the 3-year weekly chart, we can see 60 to 62 is where the next major level of resistance is. And I mentioned I want to shave off a little bit in the 60s where, we got close enough to 60 where I was like, okay, let me shave some profits, right? And then I want to shave the rest of the position off, probably get out of it completely at around $62. And then from there, I might look for a re-entry if we see some more, bullish momentum into the 65 level. That's where I'd consider getting back in, maybe up into the 70s and beyond, but we'll see what happens if we get there in these next couple of months. So overall, that is what I ended up doing today. Really nothing, just managing my swings, keeping an eye on them to see if anything, breaks a technical point to cut losses or take profits, whatever, in terms of that. Didn't really do anything, but that is what I'm involved with right now. Drop a comment down below. Let me know what you are in. I'd love to know. Now, let's talk about what I'm watching, in my opinion, on Tesla stock right now. So here we are on Tesla stock, and you guys can see today we hit yet again another all-time high at $422.01. And this is funny, guys, because we actually hit 420 today. And if you all remember from a couple of months ago, was it a year ago? I don't even remember, but in the recent past, Elon Musk tweeted Tesla private, $420, funding secured, something like that, right? And he tweeted that when Tesla stock was at, what was it at that point? What do you guys remember, right? It was at around like 350. It might have been here. Was it? No, it was not in 2017. It might have been here, 350, something like that. He tweeted that, and all of a sudden, a series of events occurred. Then a couple of weeks later, months later, you guys saw the stock dumped all the way to 176. So from that drop, we hit 420, and I figured that's kind of funny. It happened, right? Elon Musk tweeted it, and now it finally happened. But is Tesla stock in a bubble? Let's break this down on the 90-day chart, talk about some things that have happened, in my opinion, that have pushed up Tesla stock here. So you can see literally 4 months ago, in the end of August, this stock was at $209. 4 months later, it has doubled officially to $422. And for those of you guys that can't do math, 210 times 2, what is that? 420. So that is crazy. What has happened since then? We got a surprise profit here, which took the stock from 260 up to around 330 in the matter of a couple of days. And this is really where the huge momentum shift happened, in my opinion. Ever since this earnings report on the 23rd, which it's funny, that's 2 months, really literally 2 months before filming this video. Ever since then, the momentum has been up. I believe we got some Model 3 numbers during this time period as well that were positive and influential on the stock to the upside, right? We got that Cybertruck unveiling, which brought the stock down, believe it or not, from about, what was that, $360 down to about 330, but ultimately that ended up being a dip by a higher low, and the momentum really continued from there. And if you guys remember, this is where I swing traded Tesla, ended up selling way too early, but that's besides the point. right? And from there, we've also gotten good news about, I believe, a gigafactory in Berlin, is in Germany, if I'm not mistaken. It's in Germany. The Shanghai gigafactory. All of these things have been extremely positive. Model Y for Tesla as well. All of these things combined have been pushing the stock like crazy. But me personally, at this point, I do believe Tesla's in a short-term bubble. And by bubble, do I mean it's going to pop and go down to $100? Is it going to pop and go down to $50? Absolutely not, guys. I'm a bull on Tesla. Let me just make that clear. I'm a bull on Tesla. I believe they have a lot of potential in the future, but I think a lot of people have been hopping in the bandwagon, on the bandwagon, buying with all this good news coming out. Cybertruck, that huge PR move that, Elon Musk pulled in terms of breaking the glass. This has brought a lot of attention around Tesla. Not saying people have been buying stock because of that. Maybe, who knows? But there's just been a lot of hype around Tesla, and I feel like there's been a lot of FOMO here. A lot of people hopping in, fearing they're going to miss out on the train, and it's just been pushing up the stock like crazy. So I do think it's in a short-term bubble, and this doesn't mean that it can't continue to go up. If it keeps going up, maybe 450, maybe 460, we may see an even bigger pull down from that point, but ultimately, I'd love to see a pull down. I think there's a huge potential here that with any piece of negative news that comes out, even maybe a negative earnings report, that Tesla could see a massive pull down, maybe down to about 380, maybe back down to around 360. We can see the pull down that we saw, after that unveiling of the Cybertruck. We went down from 350 down to 330, which was a pull down to a previous resistance as a new support. So if we do something similar to that, pull down to a previous resistance and hold it as a new support, that would be putting us at 360 per share. So that could be a trim of Tesla here of around 15%. So that is chunky there. I'll be honest, that is chunky. I don't know if that'll happen, but maybe 390 too. That's another option of a shorter trim off of around 7%, which is probably more realistic in my opinion. But either way, in the short term here, I'm not touching Tesla. I love the company. I'm long. I believe in it. But as a swing trade, I'm not touching it, right? Because I don't want to get caught in the top here, have a piece of bad news come out, whatever it may be, and then the stock sells off like that, and you get a lot of selling pressure, people start taking profits, and then you're screwed, right? So I rather wait and see if this little mini bubble pops. Maybe we get to 380, maybe we get to 390, maybe we get to 360, who knows? And from there, that's where I kind of want to build a position in my swing account in Tesla. So those are kind of some thoughts. I'd love to know what you guys have to think. And come on, take a look at this 4-hour chart. RSI is literally about to pop off the chart, and it's at 90, 85, 90. This is a straight run up. There's not a single pull down, very overextended above the 50 SMA. This is like a rocket, right? This is literally like a spaceship taking off into the air. So I'd be very cautious here in my if I were you. You don't have to take that advice. You don't have to listen to any word I say. You actually shouldn't, right? Because this is my opinion. If you want to make any sort of decision in the stock market, you have to understand whatever decision you're making fully and don't base it on anybody else's opinion. So let's talk about UGAZ, because natural gas yet again saw another massive dump off, this Sunday night when the futures market opened yesterday, as well as heading into today, which is Monday, guys. And by the way, if you are celebrating Christmas, Merry Christmas Eve if you're watching this on the 24th, and happy holidays in general, guys. I really hope you all enjoy yourselves, have fun with your families, and so forth, right? So here on natural gas, we can see today we were down, 0.003, which is really nothing in terms of a dollar value. But the big drop came yesterday, like I said, Sunday night. We dropped from 230 down to about 225, which was a gap down of around 3%. And from there, like I mentioned, the downtrend continued all the way down to around 290. 219. So if we go to that hourly chart, the pattern continued, guys. We didn't break out like we wanted to. The bulls wanted to, at least, to get up to 250. We didn't break out and fill that, which was an option that I was considering on Friday, which would be a 6% move, but we ended up gapping down, breaking below the SMAs again, both the 50 and the 180 SMA, which, as you may know by now if you've been watching my videos, that is very, very bearish, and we almost hit a lower low today, which would have been really a terrible thing for the bulls out there, because that means the downtrend is really just continuing to get worse, but we almost did, which would be if we got below $2.15. So at this point, we know that natural gas has been bearish. It's no really surprise, right? Production has been very high. If you've been watching my natural gas report breakdown videos, which I highly recommend you watch those on Thursday, so subscribe to the channel, hit that notification bell, and watch those videos on Thursday, because we've been mentioning that production is very high compared to last year. If you guys remember last year, natural gas was running up so much. I believe it doubled in price because there wasn't much production, but we had a very cold winter, so there was a lot of demand, which caused that squeeze in the price. On the flip side, this year we have a lot more production, 600 billion cubic feet more production than we did last year. We have warmer weather, a more mild winter, which really does not stimulate demand. So that's why the prices are higher, because not as many people are using natural gas, which is why this downtrend has been so just ugly over these past couple of weeks. It's really been about a month and a half at this point, pretty much since the beginning of November all the way to where we are now. So that's kind of the rundown. Really, the downtrend is continuing here. If we flip up UGAZ, this went through the reverse split. You guys can see we went from 880 up to 81 bucks, and I've been getting questions and messages about the partials. If you guys don't know what the partials are, if you were holding UGAZ, those are the extra shares that were not divisible by 10 that you are going to be receiving by January 3rd, I believe. That's what Credit Suisse said. And if you guys want to see further information on that reverse split, go check out my video a couple of days ago, or you can just simply type in YouTube Stasserfest UGAZ reverse split. It'll pop up and you'll get more information on that. But pretty much it went through a reverse split. New price is 81 bucks, but it really doesn't change much other than the fact that you have more shares, or less shares in your account rather, and you get those partials by January 3rd. And overall, this was down about 12% today, down 10 bucks, because natural gas took that massive dump. So at this point, how am I playing this? I'm just going to be long DGAZ. I'm not actually long DGAZ, but if I were to play this right now, I'd go long DGAZ, just due to all the factors I mentioned earlier about production, the weather, and all of that good stuff. And honestly, the trend does not lie, so I don't want to fight against the trend, which is the downtrend that natural gas is in. No need to fight that. So for now, DGAZ is continuing to win the battle between UGAZ and DGAZ. So let's talk about some other ones that I'm currently watching here, one being NEO. And NEO showed some very nice price action today, and you guys probably saw this if you're watching it. The nice price action I'm referring to is the break above 270 and the break above 272 for us to hit that higher high at around 276, which ultimately is the continuation of the uptrend there. So that's positive for the bulls. And if we go on this hourly chart, we can also see we pulled down. We saw a healthy pull down from 276 down to about 265, and we held that EMA, or not the EMA, the 50 SMA, this green line on the hourly chart heading into the close. And if we go on the daily chart, you can see strong consolidation for the last 2.5 hours of the market today. So that's a pretty good sign. So NEO at this point, guys, I'm looking to trade it between 270 to around $3 per share. If we see, that'll give us probably up around 10-12% profit. So this has been bullish, and I really do expect it to continue ever since that Intel deal with Mobileye. Like I mentioned, maybe some of the Tesla optimism has been spilling over into NIO, but a lot of that good stuff combined, has been pushing the stock up, which is why I'm really interested in getting in it for a swing. But when the opportunity presents itself, and I believe that could be either tomorrow or later this week, maybe heading into 2020. So let's talk about Disney, guys. Ticker symbol DIS. I think on the 4-hour chart, you'll be able to see this. We're setting up for a potential dip buy here at around 143, 145-ish if we end up holding this 180 SMA on this 4-hour chart. And you guys can see, if we pull back even further, this 180 SMA has been a spot where we've held in the past, right? So we may pull down even to that 50 SMA, maybe 140 based on this yearly chart, but either way, around 140, 145, that's where I'm looking to, build a position here in Disney, because we can see back to the all-time high. That's a pretty nice percentage of profit we can make of around 7%, which I believe is possible because ultimately I'm long on Disney. I think these markets will honestly stay healthy here over these next couple of months heading into the presidential election. And honestly, I just believe in Disney. I'm long Disney. So that could be a nice dip buy. Ticker symbol DIS. PayPal's another one, which we already talked about, but I want to trade it from around 108 to 112. That's the goal, and even higher if we end up breaking 112. Boeing, guys, they actually fired their CEO today due to all of this craziness involving the 737 MAX, and Boeing didn't do too bad. They actually did well on the firing of the CEO. They had a 3% day in the green. Their stock was up $10 per share. And take a look at this. It's pretty interesting because now we're holding $330 per share, which we've held a couple of times in the past, around 3-4 times, and it seems like we want to start trucking back up into 340, 350, and that would be really the continuation of this horizontal pattern that we see here that lies between $330 and around $375. So that's a huge chunk, putting Boeing here at the top of my watch list, high alert watch list. And honestly, I just need to see it to break above this 180 SMA on the hourly, and for us to get into around 340, 345. And at that point, I really am seriously considering a swing position in Boeing stock, because I think changes in CEO here might be what this company needs to continue moving forward in a strong direction. So let's take a look at the last one that I want to talk about, which is Facebook, ticker symbol FB. And this also saw, just like NIO, a pretty nice gap up in the morning, but it followed a pull down. So we can see we hit 208, which really just pushes the momentum forward for the bulls, in my opinion, because that's a higher low. And from there, again, if we pull up this daily, you can see we kind of pulled down and consolidated. So on the 5-day 5-minute, this is looking pretty bullish still, in my opinion. And back on that 184-hour chart, this is where I want to end up trading Facebook, from around 205, 206, 207 up to around 210, 216, and maybe even beyond. Because if we go on that 3-year chart, we can actually see the all-time high for Facebook is around $218 per share. This is, I believe, when we had that Cambridge Analytica scandal. From that point, we sold off aggressively, which ended up being an amazing buying point. But now we're fiddling with that all-time high again. So from 206 up to 218, that's around 4 or 5% for Facebook, and this is looking pretty good, in my opinion, pretty bullish, especially since overall on this hourly chart we hit a higher high from the previous. So I'm watching Facebook. This one's probably one of my favorites right now, along with Boeing, for ones that I'm not in but really want to get in. So overall, that's it for this video, guys. If you enjoyed it, feel free to go down below, hit that like button, and consider subscribing if you want to to see further content from me. And don't forget to claim your 2 free stocks on Webull, which is linked down below. Once you deposit $100 and those 2 stocks, they are going to be valued up to $1,400. So I'll catch you all in the next video. Again, Merry Christmas, Happy Holidays to everybody out there. I hope you're all having a fantastic time with your families and you enjoy your holidays with your families and friends. Have a good one. Peace out.